Empty your mind. Be formless, shapeless, like water.
Hello, everyone, and I hope you all are well. And thank you for watching the videos I upload daily. So, for a long time, I have been telling that I'll be making one educational video, though you people were telling about it for a long time before. So, here I am with one of the concepts I use into the market, which is also by ICT. So, I just want to let you know that how it works. So, this is particularly a price delivery concept where the if the price was coming, let's say in this case, from a high, and we were continuously falling, and if the price had to go higher, then most likely we will be seeing some kind of accumulation phase right below it, uh, and then we will be seeing when the price was falling, accumulating some kind of liquidity over here, then we fall, then the price starts to move higher. And in this phase, most of the time we wait for the extreme POIs to be mitigated. That is uh, this particular level, but that rarely happens. And we often miss our trades. So the thing is that in this situation, what happens was the breaker block works. And you might be asking, what is a breaker block? So the very concept of the breaker block is like this, that if some high is being made by the market, let's say a strong high, then the price wants to go higher to break it. Uh, it'll be like this. So if the price takes some kind of liquidity at this high, the price wants to break higher. And in this situation, since it is a strong high, it faces a reaction and move into the downward direction. And after that, after second try or taking liquidity from the bearish side, lower side, the price moves higher, breaking this high. So, this very area where the price was reluctant becomes an area which is a breaker. So, the price returns back since it was already a strong high and the price failed it. The price returns back to this level, and then it doesn't go below this particular level and moves into the upside direction. So, this is what we call a breaker. In situations when the price is moving into the higher side and the probability is higher of moving into the upside direction, we see the price to react from the breaker area rather than taking the extreme low, like mitigating something over here. We'll be seeing that in chart 2. And then we see, so this time it will be just an intent, as in the, this will be the first time the price will show that it is going to move into the higher direction. After the second time, when this break happens, the overall scenario gets confirmed, and this will be our confirmation area where we will be confirmed that the price action has changed, and we can define our entry within this area. So, this is overall the concept of it. Now, I'll be taking you to the chart. Uh, let's delete it for now. So, this is the chart of the last day of the week. Seems similar, right? Let's see how things went. The price was coming down. It came to the support zone actually. Uh, then the price started to accumulate. And then we took liquidity of this leg over here, and the price moved higher. We took liquidity again, and then it moved higher. Though it seemed a simple move that we are exactly moving higher, taking liquidity. But what was important here was, let's move to the 1 minute. So it is quite a small time frame chart for you, but let's see the situation, what is happening inside. price made a low, moved higher. This is where it took the liquidity of this high. I'll be simplifying it again. In this situation, what we see is that the price made this high and we moved lower. The price tried to move higher and we moved down to take the liquidity of this low. And then again, the price attempted for the second time and we moved higher. And then what happened was the price came down at this level, and the second time we took the liquidity of this particular low. So, what we see here is that why did the price only went higher than this level? Why didn't it come down to mitigate this OB? Because we were having a breaker at this area. And not only that, let's see the second situation. The price moved higher, took the liquidity of this high, we went down, and then the price broke this high. And then the price was reluctant to go any lower, rather, it took the liquidity of all the lows it accumulated here. So, even in this situation, what we see is that the price confirmed that it was following a bullish price action. And then at this point of area, we got a confirmation that we are bullish into the market. And all of this move will act as a support for the price. So now our invalidation zone will change to this level. And I anticipate that the price won't move below it. What happened was the price came to this FVG. Guess it should be unmitigated. Yeah. Mitigated it. And then the whole move is in front of you. So this is how we can anticipate and trade into the changing market situations where we don't see the price tapping on the order blocks, and especially in the case of change in the price action delivery. So even here too, this is the first situation where you can enter this at this level, moving for the higher time frame liquidity sitting, let's say, yeah, it was equal high. So at this level, which later price took and came down. The second entry could have been did the price took this liquidity? Yes. Everything is mitigated. So this last swing will be a safe entry, and this could be the SL. So the RR will not be that good, but yeah, it is also one of the entries. So this is the concept of changing price action delivery. Do write me into the comments if you want a depth video over this concept.